to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started. What's up, everybody? Today is Monday, July 31st. This is Navigation Trading Live. If you haven't yet, make sure you connect with us on Facebook, YouTube, or Twitter, or all three. That's where we usually broadcast our updates, what we got going on, and of course, we stream Monday morning from our Facebook page and YouTube channel. So, hope everybody had a great weekend. A couple announcements. Don't forget, a couple weeks ago, we released our newest course, Winning Option Strategies for Any Market, and also our new ebook, The Trade Hacker's Ultimate Playbook. So any course that you purchase at NavigationTrading.com, you're also going to get the ebook for free. So if you're interested, go ahead and check that out. We've got a ton of good feedback, and I look forward to hearing more from you. So also, as always, this broadcast is all about you. If you have any suggestions on topics or discussions or strategies or things you want me to dive deeper into, this is the place to do that. So let us know, and we will do our best to cover it on a future broadcast. So the topic I want to cover this week is a little bit of a new one, and this is something that I've been doing a lot of back testing and studies on to figure out if there is a theoretical edge to doing so. And what this all revolves around is the topic I posted here is post-earnings iron condors or strangles. And what I mean by that is, you know, when we typically sell our monthly premium selling strategies, we are typically doing them on ETFs and futures, and we'll do them on stocks, but we want to avoid that earnings announcement. And the reason being is because a lot of times when a company announces earnings, there's a big sporadic move that happens immediately after they announce, okay? And so obviously with premium selling strategies like iron condors and strangles, we want that price to stay in a specific range, right? We don't want huge moves because then it can move outside of our break-even areas. So we typically try to avoid earnings, and we typically want to put on these trades when the premium is expensive, right? When the implied volatility percentile and the IV rank is over 50, that's when we know we're getting some decent premium to sell. There's the opening bell. We'll go to the platform here in a second, but real quick. So basically, we want to sell when IV is high, and we want to do it when we think price is going to stay in a fairly narrow range. And so what I've been looking at is entering these trades after the earnings announcement. So the one thing that works against you in that is the fact that implied volatility has already contracted significantly. Okay, so a lot of times it contracts to under that 50% level where we like to enter. However, what I'm noticing is that a lot of times these stocks, after the earnings announcement and after the big potential move that they have, kind of the gymnastics goes on of the price moving around, what I'm starting to see is that those stocks actually kind of settle down and settle into a range. So where we might not be collecting as much premium to put those on, the fact that the stock is staying in a fairly narrow range benefits a premium selling strategy. So I'm not at the point where I'm ready to start sending these out on the alerts yet, or making this one of our core kind of strategies at Navigation Trading, but I've been doing a lot of back testing, and I'm going to continue to test these strategies until I get some real solid numbers, and we're able to release this out and potentially do a course, add this to one of the courses that we're working on, and make sure that it is a valid strategy for you, our students. So let's go to the platform and take a look at what's going on in the market. So what we've got here is you see the S&P, the Dow, the NASDAQ, they're all up a little bit, around 0.25%. You've got bonds down a little bit, oil down a little bit, gold down a little bit. No major movers. Natural gas is about 3% down, and the grains continue to move. So as far as the commodities, it looks like commodities are more on the move than stocks this morning. Some of the international indices, EEM, EFA, EWZ, the Brazilian, they're all up a little bit. And just seeing if there's any other big movers here. Not really. If we look at some of the stocks, you see Baidu is up over 3%. Apple up about 0.25%. And just kind of scrolling through these, no other really huge movers. Snapchat, which announces earnings coming up, it's down another 4%. That stock has just been getting crushed ever since it IPO'd a few months ago. So kind of interesting there. And everything else kind of relatively calm. So what I want to do for the trade of the week is I want to take a look at a couple of these stocks that have just announced earnings. So one of them would be Amazon. Okay, Amazon just announced a couple days ago, late last week. And you can see we've had a couple days. So we had that initial big move down, and now it's just kind of potentially settling in. So this is the kind of setup that I'm looking for to enter some additional, iron condors or strangles, because now for the next 45 days, we like those 45, 30 to 60, 45-day cycles to enter the trade in, and we don't have to worry about earnings. Now, in the case of Amazon, the implied volatility did get crushed a little bit after the announcement, but you can see the IV rank and the IV percentile are still over 50, giving us a good opportunity to sell premium. So this is the vehicle that I want to put our trade of the week on. But I also am continuing, as I mentioned before, I'm continuing to do studies to see if it makes sense to put these on even if the implied volatility is under that 50 level. For now, we're still getting good premium because it's over 50, and so I think it's even a better opportunity right now. But I still, like in this case, a couple cycles ago, where the implied volatility got crushed and it was really low, the thing is, it was low, but it stayed low for an extended period of time, giving us a good chance to collect that theta as we sold premium. And as you can see, price stayed in a relatively tight range as well, which bodes well for this type of strategy. So let's go to the trade tab and set up an iron condor. On a stock like Amazon, it's trading over $1,000. So this is not something, it's too high priced to sell a naked strangle in. It's just going to take up too much buying power. And so in this case, I would do an iron condor. So let's go ahead and set that up like we do, like we teach, like we normally do. And look at about that 20 delta for our short strike. So simply right click, sell iron condor. And I'm going to go about 10 points wide to see if that looks good from a risk return standpoint. So the call I will buy is the 1095. Then if we go over to the put side, same thing, look for about the 20 delta. Looks like the 950 would be the strike there. So we'll change that put to 950. And then we'll buy the strike 10 points lower, so we'll buy the the 940. And so looking at about a 330 credit, you can see the options are still a little wide this morning, but those will continue to tighten up as volume continues to flow into those options. So if we analyze this trade, you can see with one contract we've got a max profit of 340. Total amount to put on the trade is about 660. And if we set our price slices to break even, this should be right at about 60%. Got to move this over. Should be about initial probability of profit of about 60. Yep, about 59. And of course, the way that we manage these, we will be able to typically win about 80 to 85% of the time on these trades. So that's the setup. Looks good. So I'm going to go ahead and stop the recording. I'm going to get filled. And if I get filled, I'll shoot this out to Navigation Alerts subscribers. If you haven't checked out Navigation Alerts, don't forget we've got a 2-week trial for just $7. So if you're interested, check that out as well. Everybody have a great week of trading. We'll talk to you soon.